Meta Platforms, META stock, soaring after the latest financial numbers. And I wanted to break this down, taking a look at Meta Platforms stock as a value investment. Now, they announced a first ever dividend, and that's sort of, to me, kind of both good and bad, because it basically says that Meta doesn't have any ability to necessarily invest in anything new that's going to produce growth more so than simply returning money back to investors. At the same time, Meta has been buying back shares, sort of uh, reducing the share count for investors as well. So Meta has certainly been answering toward investors and doing what they can to drive investor value. Let's break down the latest numbers for Meta Platforms stock and find out what's next for META stock itself. Let's jump in. Here's a good look, 1 hour bar chart on Meta stock. And as you can see, the big pop higher in Meta Platforms stock. Starting to see the price move down a little bit more. Meta Platforms, the yield given the next 4 quarters, underpriced relative to other stocks. So any kind of moves downward would probably initiate a lot of people stepping in and buying a lot of these stocks. Now, other stocks, the Magnificent Seven, as they are so called named, are overpriced. Apple's roughly about where it should be or could be. Likely will kind of move downward a little bit. But when you take a look at the totality, Meta Platforms is, out of those particular stocks, those 7, is kind of a value investment versus those other alternatives, and especially the broader stock market. I wanted to break down, here is a look at XLC stock. This is the telecommunications services ETF select sector. And what I did here, for those of you who don't follow me on a regular basis, this is each individual company, one share, asking the question, next 4 quarters, what is the earnings per share projection, and then what would be the yield based upon each individual stock. This is just one share. Now, XLC stock itself is weighted. I don't put the weight in this because I want to see each individual stock, and then in totality what that all adds up to. On average, the yield for XLC stock, which Meta Platforms is in, 5.314%. Broadly speaking, some of these stocks are undervalued. But that doesn't mean those stocks are necessarily going to go higher. Some of these stocks have simply fallen out of favor because of a shift in what's going on in the entire industry. Take a look at Disney, take a look at Paramount, take a look at Warner Brothers. The yield is, despite the fact that there's a fairly decent yield, a lot of these stocks are negative year to date, going backwards, say about 12 to 14 months. Those stocks haven't really gone anywhere. So when you're kind of looking at this, Google, of course, Netflix, Meta Platforms have all really kind of pulled the entire XLC stock higher. In the meantime, let's take a look at Meta Platforms, their latest quarterly earnings, 40.1, a little more than expected. This translates into projected revenue. I had to move 2024 upward a little bit, as well 2025. Expectations for for this year and next year are much higher revenues, or slightly higher revenues than initially we were told or thought via analysts. Now, AI, of course, is having its heyday, and this is really kind of driving a lot of these stocks. So we're having to adjust a lot of stocks looking at these. There's still a lot of gas and fuel in the tank, if you will. Gross margins, 81.1, fairly trend line there. Operating margins increasing. Now, operating costs, of course, and if you go backwards into 2022, you can see what happened there. Meta Platforms invested heavily during the COVID lockdowns. They didn't see the return on those investments. They slashed a lot of costs to the point now where operating margins are sort of hitting records for these guys. Net margins, 34.9%, again pushing up much higher than what they were previously. Price to earnings ratio. This kind of sort of solidifies that Meta Platforms, Meta stock, is underpriced. 23.8. A lot of companies are trading around, say, 30. The broader stock market is about 28.5 right now, but that could change. That changes quite rapidly. So, on a relative basis, on a comparative basis, Meta Platforms, Meta stock is underpriced, and we'll get into this in a minute. It's undervalued versus other investments such as the 10-year treasury, which is the benchmark. Earnings per share, these are the quarterly earnings per share. But what I like looking at is the projected. That 1970 is what we're going to look at and ask the question, what could Meta stock be trading at? Then, of course, 2025, another big jump there. Let's break everything down. Treasury yield, this is sort of the benchmark. You ask the question, what do you compare everything to? The U.S. 10-year Treasury is, the yield there is the benchmark, 4.125. If you have a stock that is yielding less than that, based on the next 4 quarters earnings per share, adding those up, getting your yield, it begs the question, well, why would you invest in that if projections for earnings make it overpriced? So there's your benchmark. The S&P 500, 4.90%. We just went sub 5%. And now my version of the S&P 500 is all 500 shares, one share. I don't put the weighting in, but that gives you an idea that the broader market is trading at about 4.90%. XLC, I showed you that breakdown of that, 5.31% for the yield there. XLK, this is the technology sector, select sector ETF, XLK stock. It's the same as XLC, it's just pure technology. Some would consider Meta a technology stock, but it's in a different sector. It's in the XLC sector, telecommunications services. 3%. Probably technology is going to drop below that 3% level. AI is really driving that portion. It's also driving Meta, Apple, and a bunch of others. 2024 projections for Meta Platforms, as you can see, the 19.7 gives us a yield of 4.31%. Your treasury yield is 4.125%. So Meta Platforms, Meta stock, as it sort of trickles downward, it gives a value investor a better opportunity to buy at an increased yield. Here's another look. I have Meta Platforms, Meta stock here, XLK stock and XLC stock. The orange is XLK, the technology sector. And as you can see, XLK and XLC stock kind of parallels to each other. Meta significantly outperforming it. But again, there's still a little bit of juice left in the tank. Now, a lot of people are starting to get nervous. We're hitting all-time highs. Non-farm payrolls came in on Friday, and that was a pretty solid number. This economy continues to move forward. As consumers continue to consume, looking at expenditures, we're seeing that move upward on a year-over-year trendline basis. Given that, that's future revenue for companies. So if we see Meta Platforms, Meta stock dropping downward, that's just more yield for a potential investor. My take on this one is buy on any dips you could see for Meta Platforms. That, yeah, we probably are going to see some selling because I think a lot of investors are starting to get nervous at these levels. But if you break down some of the S&P 500 participants, there's still a lot of yield there. So unless there's a catalyst event that the Federal Reserve gets hyper nervous about inflation and starts talking up interest rates again, that could sort of derail the stock market moving higher. But as it is, you'll probably find a bunch of investors stepping in and buying on the dips on some of these underpriced stocks with their yield relative to, say, the 10-year Treasury. So Meta Platforms, yeah, it probably would mellow out a little bit, sell off a little bit as people took profits, but the eventuality is it just keeps going higher. That it is underpriced relative to alternative investments, especially when you look at the Magnificent Seven. Make sure to hit that like and follow button if you're looking for content like this, where I break down based on value investments and take a look at the broader picture of the individual stock and each select sector. Hit that like and follow button. See you in the next video.